Have you ever thought about it? The products you use every day, the coffee you drink, the phone games you play, or the shows you watch. Behind all of these are giant companies. And here's the interesting part. It's actually possible to own a tiny piece of those companies. This is exactly where the stock market comes in. When most people hear the word stock market, they immediately picture complicated charts, people shouting on trading floors, or investors glued to their screens all day watching numbers move. In reality, the stock market is based on a much simpler logic. And believe me, it's nowhere near as scary as it seems. Today, I'm going to explain the stock market to you from scratch, using the most basic concepts, in a way that's clear and easy to understand. My goal is simple. By the end of this video, you won't have any more question marks in your mind about the stock market. Is it gambling, or is it a reasonable investment? How does it work? Can I participate? What are the risks? We'll cover all of that. First, let me say this. The stock market is not a game or a casino. Yes, there are winners and there are losers. But once you understand its foundation and approach it with the right strategy, the stock market becomes one of the most effective ways to build wealth in the long run. Think of the stock market as a huge marketplace. But instead of fruits, vegetables, or clothes, what's being sold here are shares of companies. A share, what we call stock, is simply a tiny slice of a company. For example, when you buy shares of a world-famous tech company, you're becoming, even in a very small way, a co-owner of that company. As the company grows, your investment grows with it. Let me give you a simple example. Imagine you always buy your phone from the same brand. That brand sells millions of devices every year. As a customer, you don't get any benefit from the company's growth. But if you own shares in that company, then you're not just a customer anymore. You're also a partner. As the company grows, you profit from that growth. That's the beauty of the stock market. Of course, the stock market isn't only about making money. There are risks too. Prices change every day, every hour. If a company makes a bad decision or if there's a crisis in the market, the value of your shares can go down. That's why it's so important to enter the stock market with awareness. So why do prices constantly change? Why aren't they stable? Because the stock market is built entirely on supply and demand. When more people want to buy a stock, the price goes up. When more people want to sell, the price goes down. It's actually very similar to how the price of tomatoes changes in a local market depending on the weather. One day there's a lot of produce and prices drop. Another day there's less produce and prices rise. The stock market works the same way, just on a much bigger scale. Here's something to keep in mind. Short-term fluctuations are very common in the stock market. One day prices rise, the next day they fall. But in the long run, as strong companies grow, their shares increase in value. This is the secret of smart investors. They don't focus on today, they focus on the future. In short, the stock market isn't far removed from our daily lives. In fact, it's much closer than you might think. Even when you drink a cup of coffee, you're actually a customer of a company that's listed on the stock market. The difference is, if you own shares of that coffee chain, every cup you drink also helps your own company earn money. In this introduction, I wanted to show you that the stock market isn't really complicated. It's closely tied to our everyday lives. Now let's go deeper. What exactly is the stock market? What is a stock? Why does it exist? And how does it work? To understand the stock market, we need to first grasp its logic. Imagine a large company wants to make new investments. It wants to build new factories, develop new products, but it needs money for that. Instead of taking out a bank loan, it decides to go public. In other words, it says, I will sell small pieces of my company, and anyone who wants to can buy them and become my partner. These pieces are called shares or stocks. When a company offers these shares to the public, investors buy them. You can be one of those investors. When you buy shares, you gain the right to benefit from the company's profits. As the company grows, your shares increase in value. If it shrinks, they lose value. Every day, millions of trades happen in the stock market. People place orders to buy and sell shares. Just like in a marketplace, the price is determined entirely by supply and demand. When lots of people want to buy, the price goes up. When lots of people want to sell, the price goes down. The stock market also provides a sense of security. Think about it. If we were buying and selling shares informally, we wouldn't know who was trustworthy. The stock exchange creates a safe environment for this. It brings buyers and sellers together, sets the rules, and monitors transactions. This way, Everyone operates under equal conditions. The functioning of the stock market is as orderly as a clock. It opens at a specific time in the morning, trades are made throughout the day, and it closes in the evening. During this period, stock prices constantly change. They can rise and fall several times a day. That's why watching the market in real time can feel exciting. But the real issue is understanding long-term trends. In short, the stock market provides companies with resources while also offering investors the chance to share in that growth. It's a system where both sides can benefit. So what is a stock? In the simplest definition, it's a small part of a company. When you own a stock, you become a shareholder of that company. Of course, this doesn't make you the boss, but it does give you certain rights. First, you gain the right to dividends. If the company makes a profit, it distributes part of that profit to its shareholders. This is called a dividend. So you can earn not only when the stock price goes up, but also when the company pays out profits. Second, you gain voting rights. At a company's general meeting, shareholders can vote on decisions. Of course, large investors have more influence, but even if you hold a small share, you technically still have a say. Owning shares is really the essence of investing. You trust a company, believe in its future, think it will grow, and you buy its stock. If the company succeeds, you win. If it fails, you lose. Let's take an example. Imagine a coffee chain. You believe this coffee chain will grow because demand for coffee is increasing and the company is opening new stores. When you invest in this company, you're essentially taking a small share in the millions of people drinking coffee. The more coffee they drink, the more valuable your investment becomes. This is why buying a stock isn't just about making money. It's about becoming a partner in a business. Why do stock prices constantly change? The fundamental reason is supply and demand. If many people want to buy a stock, the price rises. If many want to sell, the price falls. But it doesn't stop there. Company announcements, economic news, political developments, even a single tweet can influence prices. For example, if a tech company announces a new product, investors get excited and demand rises, pushing the stock price up. On the flip side, if the company reports losses, people panic and sell, driving the price down. Sometimes it's purely emotional. Investors panic, everyone runs to sell at once. That's why psychology is so important in the stock market. Prices aren't only driven by numbers, they're also influenced by human emotions. In short, price changes are part of the nature of the stock market. The key is not to get caught up in short-term ups and downs, but to think long-term. In the stock market, the biggest enemy is often ourselves. Greed, fear, impatience. These are the emotions that cause most investors to lose money. The biggest mistake beginners make is wanting to get rich quickly. People enter the market expecting to make a fortune in just a few days. But that's not how it works. The stock market is a journey that requires patience. Another mistake is following the crowd. Everyone's buying this stock, so I should too. This usually ends badly. By the time you buy, the price is often already high, and you end up buying at the peak. A third mistake is putting all your money into one stock. This is very risky. If that stock falls, you lose everything. That's why diversification, spreading your money across different stocks, is so important. Managing your psychology correctly is the key to success in the stock market. Don't panic, be patient, and act according to a plan. There are two main approaches in the stock market: long-term investing and short-term trading. Short-term traders try to profit from daily price fluctuations. They buy and sell quickly. This method is risky and requires experience. Long-term investing is much safer and more logical. Here, the goal is to find strong companies and hold their shares for years. Over time, as the company grows, so does your investment. This method requires patience, but it pays off significantly in the long run. For example, someone who bought shares of a major tech company 10 years ago and still holds them today would have multiplied their money many times over. The company grew, its products spread worldwide, and its stock price increased. That's the power of long-term investing. In short, instead of trying to trade short-term, beginners should focus on solid companies and think long-term. Now you've learned the basics of the stock market. It's not gambling, it's an investment tool. It's a way to share in the growth of companies. Remember, success in the stock market comes with patience. Don't let short-term fluctuations scare you. What matters is focusing on the future and investing in strong companies. As a beginner, Don't rush. Learn first, start small, diversify. Control your emotions, don't panic. The stock market, when used wisely, is one of the most powerful paths to financial freedom. And today, with what you've learned, you've taken your first step on that path. Thank you for watching. I hope the stock market is now much clearer for you. If you found this video helpful, don't forget to like and subscribe to the channel. See you in the next video.